forget. Yeah.
Mhm. 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 Hey everybody, as always, we're just going to give it, 3 minutes or so here while people join. Um, and also as always, you have questions along the way, drop them in the chat or the Q&A and we'll get them answered. Um, but yeah, it's interesting. That's what it is. And I think
Yep,
this one,
yep.
uncertainty is exactly the name of the game right now.
Hmm.
When people are trying to figure out what's going on. Should I be up? Should I be down? Is everybody else is up while I'm down? Is everybody else down while I'm up? And
Right.
gosh.
Yeah, I mean, since e-tail as well, I mean, I've not really seen so much interest in terms of understanding as to what is going on in the industry. I mean, we have been tracking it since 2008, the e-commerce metrics, Aaron, and I
Yeah.
think I know COVID. That's when we started off, right? This series, and then I saw
5 years
a
ago,
huge
by the
peak.
way.
Yeah, that was 5 years back, almost exactly 5 years back, right?
It's crazy.
And yeah, I mean, since I think that 2020, that one that we did, we were the first ones to get off the block and do this. I think this is the most I am sort of getting in terms of questions as to uh, how's the e-commerce world doing, and
Right.
what are some of the stats, what are some of the numbers. So it's interesting. We're really looking forward to this one. Yeah.
Yeah, well, it's going to be a fun conversation. Again, everybody, just probably another minute here before we kick it off. But as we go, you have questions, drop in the chat or the Q&A, and we'll get those answered as in real time if we can. Um, I I totally agree. This is a very, very interesting time. It's everything, um, from the pandemic spurring all that crazy PE investment, aligning up with the political landscape, aligning with tariffs, aligning with reduction in headcount.
Mhm.
Um, it's crazy. That's what it is.
And AI is essentially the application
Oh,
of area of AI is becoming another whole different ballgame altogether.
and then yes, if it wasn't hard enough
Right.
for yeah, let's just get let's I'm gonna go ahead and let's kick this off and then I'll kind of make my commentary about where we're at and how hard it is for digital marketers. But I think and I'm gonna drop something into the chat here, make sure everybody knows. Uh Let's go. Happy Thursday, everybody. My name's Aaron. I'm the co-founder, the managing director here at BWG Connect. We're a giant networking knowledge sharing group. Kicked this off 8 years ago to bring together digital executives on a weekly basis to get a pulse on the newest trends, pain points, strategies, whatever it might be that's shaping the digital landscape. We're going to host, I don't know, a ton of dinners this year. If you're going out to Shop Talk, let us know. We're doing a couple of events out there. Would love to meet you in person, all networking and knowledge sharing focused. And so I spend the majority of my time talking with brands and trying to flush out, hey, what are you concerned with? And when the same topics come up over and over again, we host an event like this, and we're also asking everybody, hey, who's the best around? Who do you rely on for information? And when the same people come up over and over again, we invite them on to kind of share with the community as a whole. Udayan and the team at NetElixir are just great friends, partners, supporters for years now, years and years. I know we started doing these back around the pandemic, Udayan, which is crazy.
Right.
Quarterly update, but as people were joining, they were hearing us go back and forth. We're talking about where we're at as far as digital marketing as a whole and in e-commerce, and how it's harder than ever for somebody to determine what a budget should be, where the money should go. And on top of it, we've got AI, we've got tariffs, we've got PE investments coming due, or turns in equity and all this other fun stuff. And so we kind of put together this as a whole. So I would encourage everybody, if you have questions along the way, drop in the chat or the Q&A, and we'll get to as many of them as we can. But Dane and the team at NetElixir are just awesome. They deal with a ton of brands in the network, and just as a whole, and have a great pulse. And so, Dan, I'll kick it over to you. You want to do a brief intro on yourself and NetElixir, and we
Sure,
can roll
absolutely.
right into a
Absolutely.
conversation. Sound good?
Absolutely, Aaron. I think, as you mentioned, we started this entire series in March of 2020, literally as the pandemic started off, and it's just interesting. In 5 years, looking back, what do I see? And very interesting as to when I really look at 2020, there are some very interesting trends which sort of we detected then, and there are some trends that I'm going to be sharing today as well. But really, a lot has happened within these 5 years. So let me do a quick introduction of the topic. I'll talk a little bit about who's NetElixir. Many of you may have attended our sessions earlier as well. And I'll share with you Q1 2025 trends and insights also. Some of the Q2 forecasts also. Now, forecast in times like this, Aaron, becomes really tricky because things are fairly fluid at this point in time. And so I'll try to explain as to what went behind the models and so on. And then finally, a little bit on the marketing side, because we are a digital marketing firm. And I'll sort of share with you one very specific strategy, which we have been able to use with a tremendous impact as well. Uh, so a little bit about us. We have been around for over 21 years now, which makes us one of the oldest or the most seasoned, let us say, digital marketing agencies out there. We are independent. We have built our own AI for top-line e-commerce growth, a product called Elixir Insights, which has been it actually is, to an extent, a COVID baby. So the conception of the technology started in 2018, but the technology was released in 2022. And since then, that has become a massive differentiator for our clients, helping drive top-line revenue growth for their business. We also are very privileged to have a long-standing partnership, a digital connections partnership with UPS as well. We are premier partners for Google, Microsoft, Meta, Amazon, Pinterest, certified minority business. We also have our own foundation whereby we are giving back by sort of sponsoring the education of high school and college girls from underprivileged classes in India and helping them pursue their dreams of a better life. So this is the foundation. It's called the Udayan Foundation. Anyone who's interested in knowing more or contributing, you can use the QR code there. A little bit about me. I founded the company 21 years back along with my wife, literally out of our living room back in India. And it has been quite a fascinating 21-year ride where we have seen an endless number of cycles of digital marketing evolution. I keep on joking that when we really did our first trade show, and we were talking about e-tail just a bit back, iPhone had not been invented yet, and it's just been fascinating. So very blessed to really have been a part of this entire evolution and a journey as well. I am also an academic at heart, so feel free to connect with me on LinkedIn. That's my LinkedIn link right there, or send me an email as well. So again, our presentations are extremely packed with data. So there is a lot of data and insights. And what really Aaron helps me to do is just ask a lot of questions around the data. So which really helps us to add some color, because at the end of it, this has been our key motive for BWG and NetElixir. How exactly can we really make all of this data actionable for your business? So what I'll share with you is some amount of macro data. I'm pretty sure many of you may have reviewed and seen the macro data as well, but we wanted to start with that. Then touch very briefly on NetElixir retail data as well. So we have a retail intelligence unit that we had set up in August 2008, and we collect real-time e-commerce as well as the key Google advertising data as well. And we have done it for a very long time now. And the last part is more of a commentary, like just what are some of the thoughts, what are some of the insights as well. Any questions, feel free to add it to the chat as well. It's extremely important for us, both Aaron and me, that we engage in these conversations and a discussion, primarily because these are times of change. And I think the only way for us to really all figure out our ways through all of this is together. So that's where I would really definitely rely on questions from your side as well. So I'll start with e-commerce sales. So this is an analysis that we were doing using the government report. It's the census.gov. That's the link that you write here. And it does not include the inflation effect. So without the inflation adjustment, the overall retail sales uh, in the US, I'm talking about year-on-year growth, Jan plus Feb, went up by about 2.7%. Now, some of you may be saying that didn't the number go down? It was month on month. January actually declined by about 1.2% in adjusted, and Feb is showing a 0.2%. I think after adjustment, we believe it will be also down about 0.5% as well. So it has been a slow start to the year by all means overall. The non-store retail sales, and this is again a description or the definition in which the government essentially classifies it, has gone up by about 5% Jan and Feb. There are certain categories who are outlier: health and personal care plus 6%, food and grocery plus 4%. And the interesting part is all other categories, almost without exception, have either been flat year on year or lower than 2024. And we are not including the 3%, the CPI adjustment or the inflation adjustment, right? So if you incorporate that, the numbers don't really present a very exciting story, at least in the first few days of this new year as such. So we wanted to dive a little deeper and just see as to what is going on. Are there any trends? And this is an interesting one, and just stay with me on this thing. So essentially, we have tried to track, and this is just significantly normalized in a different scale altogether. We have tried to track the year-on-year increase in the number of orders. And the blue line essentially is 2024, so last year. And the red line is essentially this year on a day-by-day basis. And it was so interesting, as you can see, till about the 12th of Feb, the red line was almost consistently trending higher than the blue line, right? So the number of orders, at least for our customer base, and when I say our customer base, is about 75 large and mid-sized retailers, e-commerce companies, representing about 10 retail categories, was consistently higher. But since the 12th of Feb, somehow things really went off and it became a lot more unpredictable. Now, when I really look back, it very clearly seems that the first 15 days, for first 15 days of March, the months of Jan and Feb can be broken down into two parts. One part is this, which was very clearly and positive overall start to the year. And there was very clearly an optimism which led to a lot of consumer demand. And then since 12th of Feb, things really became uncertain. So this also almost exactly coincides with all these tariff discussions, which started. The tariff discussions started early, but this was, I think, the time when the flip-flopping on tariffs really started happening as well, right? So tariffs one day, gone the next day, 30 days later, 30% plus a 10%, and so on and so forth. So I think we firmly believe just because that sort of a change or that led to a significant amount of uncertainty in the overall environment. And very clearly, as you see, the numbers show the number of orders became a lot more unpredictable as well. Understandably, I think uncertainty is the biggest challenge or the biggest struggle, probably, which leads to such a consumer demand. And it was very interesting because the data that we really collect exactly showed the date beyond which the online sales were a little off and on. It was, for example, there were days like around the first week of March where the numbers were strong, then again sort of fell and then went up and so on and so forth. So this was an interesting observation which showed the importance of reducing uncertainty to really have a consistent level of online sales and orders and so on. Interestingly, we were trying to map this with the consumer sentiment index using the UMISH consumer sentiment index chart as well. And you would see that the consumer sentiment experienced a sharp drop in the past month. and so on. And you can see, I mean, in that small box below the last 12 months, you can see as to how big of a drop was there from Jan to March. And in March, consumer sentiment is tracking at uh, one of the lowest that since we have seen, the 57.9, which is very comparable to what was there in better than 2022, but still pretty bad. So I think the uncertainty is causing the consumer sentiment to take a hit. The overall inflation expectations have also gone up quite substantially. Again, this is using the same UMISH study as well. So that is typically the key theme overall that we are seeing constantly, effectively in the first roughly about 45 days of the year and so on. But let me pause here. Aaron, any thoughts, any questions, anything at all? Or 65.
Yeah, I mean, just a quick reminder, if you have questions or thoughts, drop them in the Q&A or drop them in the chat. Yeah, I mean, do you think that that initial onset where people were feeling good in January was kind of a pull forward from knowing that tariffs are going to go into place and the prices are going to go up, so there's potentially a surge in orders ahead of time? And then what we see is it dropping back down to a year over year, what seems to be pretty much flat year over year, which kind of aligns with the data you had before that. They almost align. I mean, there's ups and downs that are different, but the overall
Right.
average, in the rate of change, the mean on the line, it seems pretty much the same.
That's a great point. So effectively, I think this is again more of a hypothesis essentially that we have. I think the first part was coming out of the election. I think many consumers seem to have expected uh, similar decisions uh, from the president very clearly. So I think the last time, effectively, if you really look at it, uh, some of the tax cuts, etc., some of those changes definitely had a positive influence in the overall sentiment and the buying sentiment as well. So I think the expectations were pretty positive coming out of the elections and so on. So December was strong. December was actually a very strong month, and then you really sort of saw that positive expectation sentiment continue in Jan as well. In terms of pull forward, difficult to mention primarily because the tariff discussion didn't really peak till about that 12th of Feb. I mean, tariff discussion started beginning of Feb, but it had not really sort of peaked by any means during that time. So from all of this stuff, I am not very sure if it is as much of a let us say pull forward essentially from uh, the purchases because of tariff expectations. I think it's just an overall optimism that from here things should go even better as well, which I think is led by effectively a reference to maybe President Trump's previous term as well. And I think the expectations were very bullish at that point in time, sort of coming off the bat. So that's how I would sort of interpret it. If you really look at the numbers, the red numbers are pretty high. I mean, in many cases, uh, if you really look at even the 500 points part, is significantly higher than what this blue line ever touched last year in the first, let us say, 2.5 months, and so on and so forth. So it was just significantly high. And I believe that there was a big opportunity had that some amount of consistency or constancy of uh, the tariff decisions could have been there, then this may actually have consistently, let us say, breached that 500 number or the 500 line as such. Aaron. So I think it's just to do with more of uh, even because I have seen that even if the tariffs are coming, if it is a constant number and there is no change in that position, uh, consumers tend to adjust to that change, right? However painful it may be,
Yeah.
because
I
they
mean,
know
getting
as to
back to
what
this
should they
certainty
factor in.
versus uncertainty.
That is right.
So
It is
as
basically
long as
entirely a case
anytime
of
there's
uncertainty.
uncertainty thrown in, I mean, it does make sense that what we have is a drawback on.
Yeah.
Okay. Yeah.
So
Awesome.
that uncertainty really sort of forces consumers to really behave in a very different manner. So with that part, we tried to track also around the country as well, whether there was any perceptible difference. Now, this is Jan and Feb, the year-on-year e-commerce revenue growth by region. So overall, still for our data set, it is tracking at about 3.1%. This is only e-commerce and only our data set essentially. West is a little low, but again, West had a very rocky start to the year with the wildfires and so on, right? The January was a terrible month for California specifically. I mean, the SoCal, some of the areas and so on. So I think it's just a overall sentiment part. I think January was a slow month overall. Midwest continues to be strong. South continues to be strong. Northeast is a little more tepid, let me just say. So overall, no perceptible differences. Maybe you can say that, I mean, there are some differences based on, I mean, the political affiliations can be marked out. I think the UMish sentiment also sort of calls that out as well. But other than that, no perceptible difference and change. I think I wanted to point out two parts which I am a little concerned about, which I've not really put in this chart. The size of that blue bubble and the green bubble, which is +6%, +4%, actually has come down a little bit in the month of March, Aaron. I was really looking at the numbers in the morning today, and which seems that uh, somehow in South and Midwest as well, the consumers are feeling the pinch of uncertainty as well. But they still are more optimistic. I think overall in terms of the consumer sentiment seems to be higher compares to the coasts. But something to be very mindful of that the consumers uh, are really looking for an answer to an extent combat or stop this level of uncertainty as well. So that's the part which I wanted to highlight or call out. We also have been tracking the Google numbers as well, since we really manage the Google Ads program for a wide range of companies, food to fashion in the retail direct to consumer e-commerce side. I think we have seen the cost per clicks is a good indicator of how much the competition is, how is the advertiser thinking, and so on. So if you look at it, I think there is still a cautious optimism driving a decline in CPC inflation, but there is an optimism essentially that things will get back, but people are being a little more conservative in terms of their Google advertising spend. And talking about the spend, not only the CPC inflation is lower at this time, so a great time for us to buy the clicks in many categories, which is cheaper. But also, I think the Google ad spend continues to be fairly steady. It's still about 9% higher than last year. I mean, it's just more conservative. People are being more uh, 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 careful in terms of where do we really invest and how do we invest and so on and so forth. So, but we have normally seen that in the last 18 years that we have been doing this study, that somehow the Google trends are a great indicator of how the advertiser sentiment is and their bullishness overall uh, of this entire system as well.
Have you seen an impact, or how would you correlate like a chat GPT or perplexity for
Yeah.
the impact on Google ad spend? Maybe we're going to get there, but that, what I'm hearing a lot is people using, one of these engines to do searches rather than Google.
Right, right. Actually, I spoke with Justin pretty much at length exactly a week back also on this, Aaron. But I mean, we wanted to track only the economic part, but I've not really covered that for this presentation. But I think there are two or three forces there as well. The adoption of things like I mean, basically the generative AI engines has gone up. So Search GPT or even the Chat GPT use is now pretty high. I mean, it has, I think, scored more than 200 or 300 million active users on the Chat GPT and so on, which is definitely impacting. We have also seen the AI overviews launched by Google. Uh, uh, Anywhere between 7 to 10% of all the search queries now really have AI overviews. So as a result of which, a lot of consumers are not even clicking through to the website because they are really engaging in a conversation with the chatbot, let us say AI overviews. And we have seen this. I mean, Google doesn't report this, but the dwell time, the time in which you are spending time conversing with Google, let us say, or GPT or whatever it is, has gone up or seems to keep going up, which I think is an interesting and an important metric. It is not getting reported by Google yet. We call it dwell time. And the third part is Perplexity is very innovative, but I think in terms of scale, it is far behind. So I wouldn't say Perplexity poses any mentionable threat at this point in time just because of its scale. But ChatGPT is definitely posing some challenges, most definitely. Yeah.
Awesome. Awesome.
So moving on to this, just to summarize, this more of a commentary from my side. I think I still remain pretty bullish because the January data indicates that the consumers are willing to spend, Aaron. I don't think it is led by tariff. It was just a consumer wanted to spend. Consumers were optimistic and they actually did spend more in Jan. And I somehow still feel that once the economic uncertainty eases a little bit, some of that pent up demand from Feb and even March is sort of following the suit is likely to materialize. I'm really hoping that happens in Q2. I know there are quite a few headwind factors, so as to say, in Q2 as well. But I did really sort of still remain bullish. And some of the categories where we are definitely bullish is fashion, beauty, food and grocery, gifting, and pet supplies. And I have basically forecast for each one of them later in my presentation. But uh, I feel the consumer sentiment may actually have fallen a little further before it sort of bounces back up. And I think that's a possibility. So I remain an optimist despite some of the fluctuations that we have seen in the last couple of months. On the Google side, I think despite the Google Ads CPC trends suggest that the businesses are proceeding with caution. But I think if you look at it, the CPC corrections, the cost per click corrections are overdue. There, I mean, in certain cases, the Google ad prices in certain categories had gone on to zones which are not really very clearly validated and justified. So I think there is a bit of a correction which is happening there as well. But overall, I think businesses are proceeding with caution. Advertisers are proceeding with caution in terms of advertising spend. They're asking those questions, understandably, the effectiveness of the spend. At the same time, I think based on the graphs that I shared earlier, they definitely are hesitant in terms of stopping advertising or pulling back or cutting back dramatically. So, because the moment you cut back, you are essentially going to lose market share or share of voice, essentially. And that's something that they cannot ill afford because specifically in uncertain times like this, I mean, stopping advertising or significant dramatically cutting advertising spend, uh, we have seen for the last 20 years that we have been in operations, probably is the biggest mistake which a lot of advertisers make. So you really need to have that threshold presence because to get back that lost share costs you a lot more. And at the end of it, market share is valuable, right? So having said that, I mean, the numbers that I have presented don't really uh, convey a very optimistic or a very positive thing, but I'm really sort of still optimistic primarily because the January numbers that we have seen really support that level of optimism that once the uncertainty reduces, I believe there is a big chance that some of the pent-up demand from February and March is likely to materialize and we are going to see growth. In fact, I would probably, maybe a little too early, but I think by the time the Prime Day sort of hits us in July, uh, I would not be surprised if things are again back on track and better than that. So essentially, that's what my thought would be. But let me pause. Any questions, Aaron? That was my
Uh,
first part of the
no,
presentation.
just a quick commentary. Around January is that the tariffs weren't in place, and the new administration was just getting in to place, and there's a lot of changes that are going on, and so as people are trying to figure out how is this all going to shake out, and when is it going to shake out.
Yeah.
Is a thing that people are struggling to understand right now. I guess I do agree. Like in January, that was optimistic. The other thing is like not a lot of people are way down. So if you have just been able to hold your own by now, there's not a complete drop off. I think people are holding their breath, and it's going to go one of two ways. And everybody, I'm an eternal optimist, and I'm hoping it's going to go up. And I do agree with you. You cannot turn off the spend. You can't send it.
Mm.
Um, why are you bullish on pet supplies in Q2?
I think overall pet supplies has been trending very steady, Aaron. So I think this is is one of those, I would say, fairly slowdown resistant categories and so on. And yeah, I mean, when things again start bouncing back, they normally, I mean, those categories which are fairly resistant to these downturns normally are the first ones to get back on track. So that's, I think, purely the key reason why I have sort of mentioned pet supplies here.
Yeah.
So let me move on to the second part of this. I hope we are doing well on time. Yeah. So this is the second part, more on the e-commerce forecast. So I think it was difficult, as I mentioned. Just some very quick understanding as to how we do this. It includes factors, obviously, the year till date category level data, the last year's Q2 trends, and some of the key macro factors as well, inflation data. It does not include the consumer sentiment data. We have not been able to find a way to incorporate the consumer, let us say the UMISH consumer sentiment index in our overall projection. So that is something which the model does not include. And also, I think there is a firm belief, an underlying belief that we have within the research team as well, that greater certainty in the macroeconomic factors could trigger a spike in demand. And our Q2 really reflects our cautious optimism as well. So this is the category-wise projections. Uh, Overall, we are still optimistic that Q2 can be a plus 6% year-on-year online sales growth segment. These are all direct to consumer. I don't include the marketplace numbers here, which is a big chunk, like 50% plus of all the e-commerce is marketplace. So it may not be a full picture, so as to say. Some categories like fashion, food, I think will do well. The ones that I really worry about, one is home improvement. Now, home improvement has been down for the last about a year and a half now. Jewelry has been slow. It primarily is, I think, uh, specifically the premium jewelry is one area where I think we have seen some amount of hold back in terms of investments. And similarly, the tools and hardware. But I think tools and hardware and home improvement are probably still coming out of the pandemic effect as such. But the other categories, we remain by and large fairly optimistic that there is enough demand. And once some amount of certainty is there in the environment, I think there is a high probability that the numbers, the growth really happens. So that's the thought, Aaron.
Yeah, a couple questions come in. Do you have any percentage growth breakdown for the sports industry, sports equipment in
Sports
particular?
equipment is a subset of the category as such. We are fairly lukewarm on the sports equipment category as well. And it would, again, our data set is not big enough, but when we sort of did the calculation, it was just about plus 2%. So it's just a very nominal increase year on year as such. But our data set is not big enough for us to really be confident enough to share that publicly, yes.
Yeah. Awesome. The next one, any insights on consumers' willingness to shop on, Shopify direct to consumer stores versus Amazon? Have you seen any trends there?
So this would be primarily on the direct to consumer side. So this includes the Shopify customers as such. Amazon, I think, has been going through a whole different set of cycle as well, the buying criteria. And overall, I think, as we know, Amazon itself drives almost about 50% of the e-commerce revenue. We are seeing two or three interesting observations of selling on Amazon. One is understandably the tariff factor and the overall cost increases are proving to be an interesting challenge. Second, we have seen, and that's, I think, not no surprises, but normally every year, I think that we have been tracking Amazon. In the month of Jan, we have seen a sharp increase in the number of advertisers, or let us say businesses who are selling on Amazon and advertising on Amazon. We call it the New Year effect, and which really pushes up the cost per click on Amazon dramatically. So January saw a big spike in Amazon CPCs or Amazon ad CPCs, almost to the effect of about 26% year on year. And when we really calculated, this was just a very manual check. We saw on an average for these categories, the number of advertisers who were really competing for that space on Amazon go up anywhere between 10 to 15%. So more number of advertisers came in, which sort of led to a higher CPC and so on. Yeah. So that's, I think, another observation on Amazon. The third observation on Amazon essentially is we are seeing a lot more businesses trying to manage the programs holistically. So because Amazon, understandably, the margins are getting hammered constantly. And from that perspective, in fact, that's one of my observations in one of the latest slides as well. We are seeing a lot of businesses trying to manage the Amazon P&L very separately, and at the same time factor in all of those fluctuations within Amazon as a part of the holistic calculation as well. Yeah, so I know quite a few questions have come in. So.
Yeah, they're dropping in fast here. And just one more, Matt, just on that. What I've seen in direct to consumer versus Amazon was kind of that pendulum swinging back and forth on what do you solve for. And so as direct to consumer, profitability was the number one driver of, talked to 20 to 30 brands a week. Profitability was the number one driver. And so they try to solve for Amazon, and then they're trying to solve for direct to consumer. And what we're waiting for right now is a lot of these advancements in AI and ML, and on the back end, the tech stack that you can plug in. Until those come down, I have a lot of brands evaluating the direct to consumer side, how much money they're actually making off from it. And then they're plugging in these new ones that can drive the cost of operating a direct to consumer business down so you can get the margins back up. But then at the same time, tariffs hit, and they're having horrible discussions with Amazon about raising prices. And so I don't know if there's the pendulum just keeps swinging back and forth, and there's no great answer, but that's and more than happy to have a follow-up conversation and go really deep on that as well. I have a question that comes in about what about toys and personal care categories? And also, this is a quick one because I think you can answer this one quick. Does this number, I think you said this is direct to consumer numbers, right? So the question is, does the number include Overstock, Home Depot, Lowe's, any of these other marketplaces? This is specifically direct to consumer?
Yep.
Okay. And so the next one is, what about toys and personal care categories?
So personal care categories, as I mentioned earlier, we have seen the numbers strong, and we remain optimistic that the personal care categories will sort of keep on growing. So I would include it in the same category as about plus 5%. But in terms of the toys, we don't really have enough data, Aaron, to really comment on that. Yeah.
Google data is great. What do you see for other channels like Meta, Pinterest, Snapchat, etc.?
Yeah, I can, because again, metadata is big enough. So I think Meta overall, we are seeing a more steady first 2 months compared to again, the Google data has seen some fluctuations, but by and large, it sort of remains very steady. So overall, the metadata in the first 2.5 months that we have sort of tracked has also gone up in terms of the year-on-year ad spend has gone up by about 7% as well. So it continues to be steady also. We are seeing some categories invest more on Pinterest. So I think it continues to be one of those channels which really holds strong for very specific categories, like specifically fashion, and so on. So I think that is pretty positive. In terms of TikTok, we unfortunately do not have as much data. TikTok has really gone through a lot as well. So for me to really be able to make a comment on this, Snap has been lower than Meta. So overall, Snap numbers have been close to about 2 or 3% year-on-year growth. So nothing to rave about. So it has been a fairly muted for I think most of the channels in the first 2.5 months.
Awesome.
So let
Awesome.
me,
Hey, great. Yeah, everybody keep dropping the questions in. We'll get them.
yeah,
We'll get
thanks
them
for the
answered.
questions. Yes. Moving on, so I think this was a section which I wanted to just sort of start getting into a little bit in terms of what are some of the successful e-commerce businesses are doing. It's an important theme primarily because what if the current slow demand phase continues, right? And I think just optimizing volume and margin by analyzing what I just mentioned, I mean, product mix sold through marketplaces versus direct to consumer website. A lot of businesses are utilizing this slow demand time to essentially assess and make those changes in terms of what should we be selling on marketplaces, uh, and what is the impact in terms of just the overall margins and so on and so forth. We are seeing a lot more contribution margin led discussions as well by business execs. And last but not the least, we are also seeing very clearly this is a very unique new product introduction strategy whereby marketplaces are not really featuring as prominently, at least as far as I know of, as they were in 2024. So I think there are certain trends, certain themes in terms of just how do we really build a more strong holistic online sales strategy as such, which seems to be a focus. Which brings me to the entire point of reprioritization and adaptation. I mean, faced with the combined pressures of all of these changing consumer expectations, aggressive product pricing, etc., etc., I think that entire business model and evaluating as to what to sell where, rather than blindly chasing the volume game, is something which a lot of the businesses seem to be doing. Building own community of loyal customers, we are seeing a lot more focus in terms of understanding the loyal customers and the higher value customers and so on, and treating them differently as well. And last but not the least, we have seen a lot of instances where AI is being strategically used to leapfrog competition as well. I know there was a lot of talk during holiday season during the AI powered shopping. It is yet to take off in a big way, but I think a lot of marketers are testing that. And but we are seeing very clearly during this time the businesses which had invested time and really had an AI strategy in place or an AI marketing strategy in place, they are able to do better compared to others in terms of just extracting more efficiency, Aaron, out of this thing. I mean, we have given an example. This is more of a 70-20-10 investment risk model. Let us say in the paid search advertising, or let us say Google advertising or Meta advertising. I think there was a question on that as well in place. So where a lot of advertisers earlier used to spend a lot of money or their entire amount of money in the core campaigns. But we feel a lot many more advertisers are investing in controlled experiments and strategic experiments. So controlled experiments are like the incrementality testing, what part of the budget is doing well, what channel, and so on and so forth. And they're making those efficiency decisions. And then strategic experiments is essentially where you are investing in new growth areas or new growth opportunity areas as such, and so on. So as a result of which, we also have seen in the first 2.5 months a fair amount of innovation and led by AI and really leading to a superior outcome as well.
Yeah, I
But
think on that tech side, a lot of the conversations I'm having right now is we're seeing finally true AI and ML coming out,
Mhm.
and not just laid on traditional like rules based, right? The original piece was just
Yeah.
rules based, and you could plug that in. It could make a lot of decisions. It was cheaper. It was faster. It gave great results. And so there's a lot of tech that's being laid on top of that that's using AI and ML to use rules
Mhm.
faster than ever to solve. And then there's true AI that's just solving the issue at hand. And I totally agree with this. Like, you have to be experimenting in it every
So,
day.
so that is the part.
Not
I think
every
so.
day.
I just want to quickly go through this. I mean, this is just, I think,
Yeah.
I mean, we, for example, in-house as well, we have been able to save a lot of time just by building our own emails and so on. And I mean, I've talked about in this particular forum earlier as well. We have really built an AI for top-line e-commerce growth, which allows you to do those rapid experiments on Google and Meta and so on. So, which is really helping because any additional revenue we are able to add in terms of just the top line revenue growth, I think is all additive and incremental. I mean, without really spending a dime more on Google Ads, if you're able to get 46% boost in high value customers and the overall AOV customer mix goes up. So I think it is really proving to have material value essentially. So that's what I had, Aaron, in this thing. So I mean, effectively, I'll just skip. I mean, we are big into experimentation. Since you talked about experiments, we have an experimentation hub that we have launched. I think anyone to get an understanding of what type of experiments our business is doing, I mean, feel free to scan this. I'm pretty sure this is almost like a kid in a candy store sort of a thing situation for me every time I go to this place. But we'll give you a good understanding of effectively what I talk about when I say experimentation per se. So that's what I had, Aaron. I mean,
Yeah,
effectively.
we've got another question. How far away do you think we are to a fully AI powered shopping experience?
Uh, so this is entirely a personal opinion. Technologically, not very far. In terms of the consumer readiness for it at this point in time, I think we will be further than what we think. Having said that, I think the reason I mentioned this because, like any technology, I think the struggle becomes how to go beyond that initial adopter group, right? I mean, the initial folks can really sort of test out and try and so on. The question is, will it really become big enough to become a sizable, economically viable set? Is where I have a question. In terms of technologically, with all the innovation, and yesterday NVIDIA's Jensen Huang made a rather inspiring presentation, which shows that they are ready for very rapid development and scale of development and growth of the new reasoning models and so on. So with that, I think it should not be too far and too difficult. But yeah, I mean, I think in terms of the adoption part will take a little bit of a time. That's what my personal point of view is. Yeah.
Yeah, adoption from, not necessarily from consumers. I don't know. I think they'd probably welcome it, but I'm just looking at teams as a whole.
Teams as well. Yeah.
And
Yeah.
we talked about this, at the beginning, like the digital marketing role has changed more than almost any other role in e-commerce over the past even 6 years. We'll say we'll get just before the pandemic through the entire pandemic, and teams have been made trimmed down and made smaller. And so I think I totally agree with you. Like, the tech is going to be there,
Yeah.
right? It is the adoption of that tech and being able to have the time to bring it in, vet it out, um, test it, train it, right? Because all these AI models need to be trained, and then have it execute and everybody feel comfortable about it. Like, most marketers at this point in time would love to fast forward 3 years and be there. But the
Exactly.
reality is there's a grind right now. And especially when we're looking at, I love this slide. We're talking about what do you do when it slows down?
Yeah, so this is
Um,
essentially an example of what you're talking about, Aaron. I didn't want to sort of spend too much time earlier on this. So what we have done is we have really mapped our internal workflows. We started with very specific goals, right? And just sort of said whether it is automation is possible or not possible. And then we have really combined, build our own RAG model plus the LLMs to really build our entire, almost like eventually it will become more of an agentic workflow where it becomes almost like AI agents for Google ad management or Google ad management in a box sort of a thing, right? And we are seeing a lot of progressive marketers really invest and over-invest in these areas as well. It has really helped. I'm just vouching straight here as well. It has been able to reduce this 30% of my core campaign management time for my team. 30% is a lot. We work with almost 200 businesses or advertisers, and 30% time managed is lost. So that's where the core campaigns part is. We have really invested this time in identifying those revenue producing experiments. So this time saved has really gotten to the experiments part as well. And a lot of businesses have started thinking on the same level. How can I invest this core time to identify experiments or growth opportunities, which can really help me scale the business? And yeah, I mean, that's something which is going to really keep on increasing and picking up pace. And we remain extremely bullish on this, extremely, extremely. I mean, we literally have bet our entire company on this, building our model and so on. And really, this particular model, which has really proven to be extremely helpful for us.
How
So,
how do brands like have this conversation with executive teams? How have you seen this work out? Because a lot of times executive teams are pushing back,
yeah.
and maybe there's a new hire that needs to be made, but you essentially have to say, just trust us because I mean,
Yeah, I think for
it's
us,
easier for you. I think you have a ton of use cases you could come in, but for a lot of brands, they don't have use cases, right? And so we're at the forefront, and everybody wants to see a use case. And right now, it's kind of like there's not. You just have to trust, and that's
no, I think we went a slightly different way as well. We said that as to what is easier for people to see. And that easier was this 30% time saving, right? It is material. It can be measured, it can be tracked, and it is time saving, right? And then we say that there are two options, right? This time saving, what do we do with this? Can we really invest in terms of deploying this time in a smarter way so that we are able to make more money? So again, you have to really quantify whatever you are trying to do. A lot of AI is getting done just because it is cool to have, right? I honestly speaking, am not really one of those in the cool camps. For me, everything has to be tangible and everything has to be converted into a very dollar impact. So the time saving was easy for us to really track. We were able to sort of save 30% of the time. This time, this really gave us the permission from our board to go ahead and say that now you have saved this much amount of time. Let us see what you can do with this. And then we really deployed the time to make more money for our clients. So it has to be quantified, in my opinion, Aaron. I mean, AI is great, but AI which does not really add any impactful and meaningful impact on the in dollar terms, honestly speaking, is a waste, in my opinion.
awesome. Awesome. Well, if there's any last questions that people want to drop it in, any final thoughts here, Udayan, as we get to the end? And again, I encourage everybody to have a follow-up conversation with the NetElixir team. They're all around fantastic friends, partners, supporters of the network, and a ton of brands that are in it. And I look for a follow-up email from me as well. I'd love to pick your brain, hear what your topics are, but also more than happy to share what I'm hearing across the network as well. Other insights across to Amazon or direct to consumer. But Dan, like key thoughts here as we wrap up.
Sure, absolutely. So, Aaron, I think I think three I'll sort of highlight. The first one is about the theme. Uh, I'm confident at some point in time, this uncertainty will actually sort of tend to become a lot certain. Let us just put it that way. I think the uncertainty will come down. And at that point in time, I remain optimistic that the demand will get realized. So that we will see a spike in demand. Whether it will happen in Q2, not very sure about it. We are factored in our projection probably end of April, maybe more likely, I think, mid of May, when we can expect some of this pent up, again, the demand sort of start going up as well. So I think the uncertainty is, I think, the only key but deterrent at this time. The second part is, as advertisers, I cannot really emphasize the importance of you not to pull back and stop advertising, because your competitors exactly are waiting for you to do that. Because to gain back market share will be a lot more expensive for you and a lot more difficult as well. And my third message is AI, which does not really have any meaningful measurable impact either on efficiency or helping you make more money, honestly speaking, is a good fad. I really do not really subscribe to that particular group. For me, AI needs to have a meaningful impact on the business metrics, which is either you sort of drive in more efficiency or you really make more money. So I think those are the three things I would sort of leave you with and the audience with as well, Aaron. But thank you
Yeah.
so much for hosting me. Yeah.
Absolutely, Dan. Thanks so much for your time today. Thanks everybody for the great questions that dropped in here. Look for a follow-up email from us. And with that, we're going to wrap up this webinar here. Everybody take care, stay safe, and look forward to having you at a future event. Thanks again, my friend. We'll see you.
Thank
Bye
you very
bye.
much. Take care. Bye-bye.